Hi there, welcome to Neppy Invest. Over the past few years, at least, Bell Potter have been releasing their stock picks for the following calendar year. So, in this video today, I'm going to go through their stock picks for 2024. But before I do that, I'm going to go back and look to see how they did in regard to their stock picks for 2023. They do release a PDF document. Now, what they do is because there's in Bell Potter, there's quite a few analysts or experts, and they choose companies within these different sectors. For instance, listed investment companies, agricultural, technology, diversified financials, industrials, retail, healthcare, base metals and gold, energy, strategic minerals, and mining services. And they have analysis in each of these areas, or in fact, a few analysis in these areas. And then they choose a few companies, maybe at least two, maybe as many as five companies within these sectors that they think that will do pretty good over the next or the following 1 year. Now, what I've done for 2023 is I have taken their selections and I've used a portfolio approach, sort of an equal weighted portfolio approach, just to see how they would have done if you bought all their companies with the same amount of money, about 43 companies that they did choose in 2023. So let's go quickly through the companies they did choose. So list investment companies, the L1 Long Short Fund, MMF Capital Investments, and Regal Asian Investments. Three listed investment companies that I don't know much about. In fact, I'm not a big fan of listed investment companies at all. I'm not a fan of fund managers either. In agriculture, they picked a new farm, A2 Milk, and Sinlay Milk. I do have a little bit of problem that they did choose fairly similar companies with A2 Milk and Sinlay Milk, and neither of those companies performed fairly well or performed well at all in 2023. Technology, Life 360, Ike GPS Group, and Frontier Digital Ventures. They might have been a little bit early with Frontier Digital Ventures. It'd be interesting to see if they pick that company again. And you'll see when we go through their 2024 list of companies, sometimes there is an overlap. They will choose the same companies. Pretty sure 360, they've chosen that company again. So they're fairly bullish on that company long term. Diversified Financials Perpetual and Cedar Woods, which is a property developer. Industrials, I do like a couple of, well, one of these companies at least, IPD Group, the Environmental Group, and DGL. Now, I will be releasing a video on DGL looking at financial year 23 results on Thursday, the 4th of January. And I am really intrigued by this company based just of valuation. So have a look out for that video. And I am considering just buying DGL just because of valuation. So perhaps they were a little bit too early with DGL because the share price has fallen, or did fall in 2023. Other industrials, Cluey, not a good performing company in 2023. AI Media Technologies, that company share price is starting to turn around now. And Drone Shield. So one company out of these three did perform fairly well, Drone Shield, while Cluey did the exact opposite. That did not perform at all well. Retail, Accent Group, Propel Funeral Partners, and Best and Less. Best and Less is no longer on the ASX. That has been bought out. I'm pretty sure they also chose Accent Group again in 2024. Maybe even Propel Funeral Partners, even though it's under a takeover bid right now. Healthcare, Telix Pharmaceuticals, Clarity Pharmaceuticals, and Mesoblast. One of these companies performed really well. Pretty sure Clarity Pharmaceuticals had a stellar year, while Mesoblast did the complete opposite because of one pretty bad announcement. Some more healthcare companies. Aroa Biosurgery, the most popular company among viewers of this channel for 2024. Bell Potter was bullish on this company in 2023. Didn't quite perform as well as they probably expected, and possibly 2024 is the year of Aroa Biosurgery. Cogstate and PolyNovo, and two more healthcare companies, Immutep and Monash IVF, which actually did perform fairly well in 2023. Base metals and gold, Chalice Mining. I'm pretty sure they would like to have that choice again. De Grey Mining, which is a fairly popular gold company on the ASX. I keep hearing about De Grey Mining. I'm pretty sure they're going into production soonish. And Nickel Industries, which is another company that was chosen by viewers of this channel. So that company made onto the 2024 viewer list. And energy company, Strike Energy, which did have a good year. Boss Energy, which had a good year as well. I'm pretty sure it did. And then strategic metals, Liontown Resources. I'm not sure how Liontown Resources did because it did have a really good start of the year. In the second half, not quite as good. Red Dirt Metals, no idea. Latin Resources, I'm pretty sure that company had an absolutely brilliant 2023. So that was a brilliant pick by the strategists from the analysis of this group of companies. In fact, they have 5 analysis choosing here David Coates, Stuart Howe, Bradley Watson, Regan Burrows, and Joseph House. Strategic metals, some more sections here. Green technology metals, Arafura Resources and Dreadnought Resources. Not sure about green technology and Dreadnought, but Arafura Resources did not have a good 2023. And finally, Alpha A4N. Before we go into mining services, Mader Group, good year. DD1 has been bought out by Parenti and Imdex. And that is it. So let's have a look at how these companies performed in 2023. And I've ranked these companies by best performing companies to worst performing companies. So by far the best performing company among these list of about 43 companies, is it 43 or 41? 43 companies is Latin Resources, up 190.8%. And then Clarity Pharmaceuticals, 91.9. Boss Energy, 89. Matter Group, 88.7. Then Drone Shield, Alpha 4, IPD Group, and Life 360 before we get to Strike Energy up 52.4, even Telix Pharmaceuticals up 38.7. So some really good performers in this list of 43 companies, but also some pretty bad performing companies. In fact, 4 companies were down over 70%. Dreadnought, Chalice, Sinlay Milk, and Cluey. We also had another 3 companies down over 60%, 2 other companies down over 40%. So some good performing companies, some pretty bad performing companies. And overall, if you did take a portfolio approach, buying these 43 companies equally weighted, you're up 5.7% for the year, which I'm pretty sure is below market returns. So you really want to beat the market, and these were below market returns. And the main reason behind that is because of these bad performance. And if I do compare to how I performed in my picks, so my picks up 39%. Your picks just down slightly. And the reason why my picks, I did pick fewer companies, about 20 companies. And the reason why my chosen companies performed better than Bell Potter and your chosen companies is because I did have some really good performers in there, 3 companies over 100% gains. But my bad performers were not that many. In fact, my worst performing company was only down 50%. In fact, only 4 companies down by more than 25%. And if you look at your selection of companies, we had about 12 or 13 down over 25%, while Battle Potter had about 10 or 11 down over 25%. So even though I did choose less companies, much lower proportion of the companies I chose had a bad year, and a much better proportion, higher proportion, had good years. So that's why my 20 companies were up 39%. Bell Potter's companies up 5.7%, and your company's down 0.7%. And again, I should also point out this does not include dividends. And to be honest with you, not many companies that Bell Potter did choose would have paid many dividends. A few would have, but not many. So let's have a look at their picks for 2024. Analysis Outlook and Stock Picks, released a few weeks ago. Now, this might either be my second last or last video of this kind, looking forward to 2024 and back to 2023. I might do one video on Livewire. Livewire every year releases a video or a podcast or something where they get analysis from different companies or different fund managers who chooses, and these fund managers choose that company they think is going to perform best in 2024. I haven't really looked for that video yet or that podcast yet, but if they do release that, if they have released that, I will definitely do a video on that particular podcast or whatever, or even article. So let's have a look at the sectors again. I think it's exactly the same. Did we have real estate before? I'm not sure. So almost the same, and probably the same analysis, although in strategic minerals, fewer analysis there, only 2 instead of 5. So let's have a look at what companies they have chosen for 2024. And the whole reason for me doing this video is to share ideas with you. That's the only reason I go through these sort of articles, is to pick up on ideas. So I will never take a portfolio approach. I'll never buy all these companies. But sometimes I will look at one company and think, oh, that's an interesting company. And then I'll do more research on that company. And eventually I might buy that company for the longer term. So the listed investor companies, Bell Potter has chosen three companies, more than likely I'll never buy. Australian Foundation Investment, AFI. That has been around for a long time, 1928, Australia's largest listed investment entity by market capitalisation. I still don't have interest in taking a position in that. The Plato Income Maximizer, interesting. So I'm not going to talk about any of these. And then MMF Capital Investments. Now, if we have a look at MMF, I'm pretty sure that's performed fairly well. Yeah, MMF was actually up 36% in 2023. So it seems like because they had a good year last year, they have stuck with that particular listed investment company. Now onto agricultural and FMCG. What does FMCG stand for? I'm trying to think. I have no idea. Anyway, Bega Cheese. Not a big fan of that company. I like the food or some of the food they do produce, but as an investment, not so sure. Rural Funds Group. Someone did mention, in fact, they mentioned it here. Our RFF, which is Real Funds Group, trades at its largest discount to its market NVA or NAV in its listed history at 39%. I've heard that somewhere else before. That does actually make Rural Funds Group a little bit intriguing. And they've also chosen Elders. So I'm actually trading Elders right now. I would never own an agricultural company for the long term. There's just too many things that are out of control of management. And I like for management to have almost not 100% control, but the very fact that agricultural companies are at the whim of many things like climate, weather, bugs, pests. Sometimes they can't control these things, means they can have a bad year. And even if they have a bad year, it's not the fault of management. And that's one of the reasons why I only trade agricultural companies, not own them for the long term. Now onto technology companies. Life360. So they're probably a big fan of that company. They've also chosen WiseTech, which is interesting. Now, share price of WiseTech had fallen a fair bit from its highs. I wouldn't say there's any value in WiseTech at the current moment, but if it keeps growing at the current rate, who knows, maybe there is some good value. And then a company I do own in my small cap portfolio, Task Group, a founder-led enterprise management platform delivering end-to-end SaaS solution in the quick service restaurant. It's probably a really good way to put it. It's an interesting company. I think the market cap of Task Group is 150 million or something like that. And I was really intrigued to see that company among this list because I didn't think Task Group would be on the periphery, in the eyes of any fund managers. And to think that maybe there are some fund managers looking at Task Group does fill me with a little bit more confidence that Task Group might be a good long-term investment. Diversified Financials, Perpetual, I don't really care about that. Regal Partners, don't care about that, even though it is run by, it's Regal Partners run by Phil King, I think it is. And again, PSC Insurance. I actually am a little bit more interested in that company, which is an insurance broker. So this is one of the three main insurance brokers on the ASX, if not the only three insurance brokers on the ASX, AUB Group or whatever it's called, and Steadfast. Those are much bigger than PSC Insurance. Seen the EBITDA grow by 24.8% CAGR over the last 5 years. Potentially, there are fund managers transitioning from Steadfast and AUB Group to PSC Insurance. I did have a look at the chart for PSC, and it wasn't an uptrend or anything like that. But I'm pretty sure the valuation of this company is maybe a little bit more attractive than the other two. And then you get people like Rudy who think you just buy the biggest company in the sector because for some reason he believes the biggest company is always the best, which is not always the case. In fact, you could even argue the bigger a company is, the less agile it's going to be, and less likely it's going to be able to grow in the future. But for some reason, he loves big companies. Real estate, there's one company here I don't mind. HMC Capital. I have never heard of that before. Founder-led real estate fund manager that has quickly gained in scale since listing on ASX in 2019. I do know Dex's Convenience Retail, and in fact, it's the very first REIT I actually did look at about 2 years ago. And I do think that that company or that REIT is interesting. at a discount, 34% discount to NTA. And the share price of that particular REIT has pulled back a fair bit over the past week. And then Healthcare and Wellness REIT, HCW. I have heard quite a few people talk about that particular REIT. So maybe there is something in that. So yeah, includes hospitals, yeah, aged care, childcare, government, life sciences, and primary care and wellness property assets. So those should be quite defensive, you would think. Maybe except childcare, I don't know. Anyway, so most REITs are now at a pretty big discount, but there could be reasons behind that. Retail. Okay, so they've stuck with Propel Funeral Partners and Accent Group, but they've also now included Cettire. I'm actually a Cettire shareholder right now. It's in my small cap portfolio. The share price of Cettire is highly volatile. It goes up and down in waves. Sentiment in this company, particularly the short-term sentiment in Cettire, changes like nothing else. I'm pretty sure it is traded by, maybe not day traders, but definitely short-term traders, which does not surprise me because short-term traders and day traders love volatility, and Cettire is a volatile stock. But Cettire, which does sell luxury goods online, has not been really hit by interest rates rises because those people who are more likely to buy luxury goods don't really care about interest rates. They aren't affected by interest rates. Interest rates only affect poorer people, which is why raising interest rates is not sometimes the best thing to do. In fact, it's a very blunt instrument. Industrials. So again, they've chosen DroneShield. Understandable. I'm not a DroneShield shareholder, never been a shareholder, but I can really understand why people have invested in that company. A lot of tailwinds behind DroneShield. I'm pretty sure they're not yet profitable or even cash flow positive. They're a fairly capital intensive company, but definitely see why some people, some fund managers are interested in that company. Austel, I am not that biggest fan of Austel. And corporate travel management, I do like corporate travel management, but whether it can perform in the next year remains to be seen. I do think it is undervalued right now. And they did make a major acquisition, forget exactly when, and I don't really think the market is pricing in that acquisition just yet. So maybe that's why, that's what Bell Potter's thinking about. Let's see if they mention that. They actually say here, we therefore see upside risk. It's really, really weird to say it, upside risk. We've seen it having already exceeded pre-pandemic TTV driven by new client wins, remaining well capitalized, and forecast to deliver strong double-digit earnings growth on a PE forward-looking PE of 18, which is a 5% discount to peers. I'm not sure who their peers are. Other industrials, IDP Education. I'm not sure about that. I still think IDP Education is significantly overvalued. They say here it trades at a premium to its peers on a forward-looking EV to EBIT of 24, which means it is quite expensive. However, I believe that this is justified given its dominant market position. Anyway, I'm still a fan of IPD Group. It seems like Bell Potter's still a fan of that company, and they've kept with Environmental Group. Now, I've never been a shareholder of that company, so I haven't really done much research in Environmental Group, so maybe I should do a little bit more research. Now onto healthcare. They've chosen Telix Pharmaceuticals again and Clarity Pharmaceuticals again. So obviously they like both of those companies. They've also included Cyclopharm, which is also a company that's chosen by viewers of this channel. So maybe I should have a look at Cyclopharm a little bit more closely because it seems like there are people out there who are quite bullish on Cyclopharm. Seems like they have not chosen Aroa Biosurgery because the last two healthcare companies I've chosen, it's Clinuvel and Immutep. So I've been a long-term shareholder of Clinuvel, so it's good to see there are some fund managers out there who are bullish on Clinuvel. And Immutep is another company I don't know much about. Clinical stage biotech company developing novel LAG-3 therapeutics for cancer. And I was going to say dancer, but it's cancer and autoimmune diseases. I would like to know when they think revenue might be coming in. That's the main thing I'll be looking at. Gold, Regis Resources, and Santana Minerals. I know nothing about Santana Minerals. I do know a little about Regis Resources. Honestly, in the gold sector, you could pick one of many gold companies and you might do fairly well in 2024. I am a little bit bullish on gold. So more than likely, because I'm bullish, gold will go the complete opposite way. But gold is now, I think, it looks like it is breaking out above a long-term resistance zone. Base metals, Aries Resources, I sort of can understand that. Aries Resources, particularly if they start that Jupiter, is it Jupiter? I forget what it's called. If they restart that mine again, is looking awfully cheap. And they do copper and gold. And I'm fairly bullish on a gold, so-so on copper, but copper chart looks pretty good lately. They're stuck with nickel industries and they've gone with mineral resources. More than likely because share price has dropped a little bit. I'm not sure if I see really good value in mineral resources. It's dependent on lithium and iron ore. Lithium prices have fallen a fair bit. Has the bottom been reached yet in lithium? Don't know. And iron ore has had a really good 2023. Will it have a good 2024? I just don't know. And also IGO. So I'm pretty sure this is just a lithium play. So they say IGO is oversold given the long-term earnings potential of the lithium assets. But who knows? If lithium prices stay where they are, that IGO might not have a good year. I don't know. But if lithium goes on another run, then maybe IGO is a good play. Strategic metals. I do like Lynas Rare Earths, even though I'm not a shareholder. I probably would be waiting for the share price to break out, but I can definitely see why you might pick Lynas Rare Earths right now for a whole year. Just thinking that the breakout will happen in 2024. Talga Group. I did see a comment in one of my videos mentioning Talga Group. I don't know much about this company, but it looks like some people do like Talga Group. I'm pretty sure the share price has fallen a fair bit over the past few months, and they've stuck with Liontown Resources. So quite a few lithium plays here, sort of Mineral Resources, IGO, which are two big lithium plays, and then also Liontown Resources. And they've also stuck with Alpha HPA. Yeah, whatever. Boss Energy and Strike Energy. So they're stuck with both of these in the energy sector. So they're bullish. Obviously, they're bullish on uranium and they're bullish on Strike Energy. And lastly, yep, yeah, it is lastly, mining services. It's good to see Chrysos Corporation on their list. I'm a shareholder of this company. However, I'm not sure I can see really good value in Chrysos. So obviously, it's all about the long-term view. I have no idea what's going to happen with this company in the next year. In the next 5 to 10 years, I'm pretty sure Chrysos Corporation is going to be a significantly bigger company than it is. Matrix Composites and Engineering, MCE. This is an interesting company. I think maybe, I'm not sure if the share price has rallied. I think it has rallied. I'm not the biggest fan of the management of Matrix Composites and Engineering, but there is some tailwinds behind this company. And if the management can take advantage of those tailwinds, this is a cheap looking company. So interesting company that they've chosen here, but I can see Matrix Composites and Engineering going in either way, up or down. A company I have owned in the past, Janus Plus Group, share price took off the other day. I was surprised with that. Their target price is $1.50. Share price is not far off that. So Janus Plus Group is the last company they've chosen for 2024. So if you do have any questions about any companies that Bell Potter have chosen, I do like some of their choices. Some of the choices I'm a bit ho-hum about, but some of the choices are pretty good, and that makes sense because I actually do own some of these companies in my portfolio, particularly in my small cap portfolio. And typically in my small cap portfolio are those companies that I think are going to perform fairly well over the next 5 years. But in the next year, I'm not sure. I don't know. It's really hard to know how a company is going to perform in a 1 year time period. Over a 5 year period, I actually have much more confidence, but over a 1 year period, less confidence. So if you have any questions about these companies, if you like, or maybe even hate some of these companies, I'd love to hear your thoughts. So leave your thoughts in the comment section of this video. Otherwise, that's it for this. And the last thing I should mention, I'm not a financial advisor. Bell Potter might be financial advisors. So if you do need financial advice, maybe go to Bell Potter or find a financial advisor that is qualified and can help you with your needs. That's it for this video. Have a good day. Talk to you later. Bye.